Trader is up at 11. Kevin Coy, Black Friday, shopping the markets. Ophir, Gottlieb, we get Niels. Again, we got a full track here on today for part of the open house. Then we got Peter Davies coming in on Monday as an alternate date. So again, a lot of good stuff still happening. Thank you for those that attended. Marlon will have. It's a good thing Marlon. I believe Marlon, if I'm not mistaken, Marlon uh, recorded the session on YouTube. I hope he did. I recorded the session as well, but I'm gonna. But when I was rendering it last night and it came up, I realized that the audio. You did record it. Good, Marlon. We're going to depend upon yours because my audio was not on. The video came out perfect, high definition, but I didn't have my audio on, so it was kind of a wasted recording, you know. So, yeah, let's talk around lunchtime, Jason, if you can. All right, thanks. Yep, I got it. No problem. Let's chat at noontime. Um, So, and anyways, when Marlon gets a chance and he has all the recordings. Oh, is that the recording? Oh, loving it. All right, great. Beautiful. There's the recording, guys. Woohoo. Thank you. Thank you. Yeah, burning the midnight oil for sure. I was so disappointed when I after rendering it, I realized that the audio portion did not record, and I was kicking myself in the butt pretty hard. Thank you, Marlon. Okay, super. Excellent, excellent. Okay, so today, uh, so if you take a look at the daily trade strategy, again, you can scroll up at the beginning and you will have a link to the daily trade strategy, which yesterday was a cycle day 3. And as we mentioned earlier in the morning, we were anticipating a decline, having the previous cycle targets fulfilled. So that was the core, and we were looking for some level of a decline. Now today is a cycle day 1, which typically we look for a decline on a cycle day 1. But as I mentioned as well, and if you've been kind of following the cycles a bit, um, the sometimes when the objectives of the prior cycle have been fulfilled, the decline can begin on the cycle day 3. Okay, so it's not like the sun rises and sets every day at similar times. So you have kind of you get a little shift in the cycle there, but it's not really. It's just kind of a waiver. All right. So instead of the decline happening on a cycle day 1, the decline actually happened on a cycle day 3 after the targets had been fulfilled. All right. So again, the market will do what it wants to do, but cycle does not include weekends. Correct. In our case, it does not include weekends. I think the one that Marlon calculates in his hotspots, I think that is calendar, but we're strictly trading day cycles. All right. So and if the market is open half a day, it's still included in the cycle. All right. If it's closed 100% for a holiday, then it's not. Okay. So in any event, we were looking for some type of a decline. Now, I posted on Twitter. Let's just quickly go to Twitter. And Twitter, by the way, guys, if you're not following us, again, it would be recommended that you do follow us, simply because there's a lot of stuff that I post on Twitter that I don't know if I can. Here we go. All right, that worked out. I post a lot of stuff on Twitter from the trading room, and notations like this and so forth. So this was yesterday, coming yesterday, right? So the prior day's high was 27.90.75. All right. And then we know that on a cycle day 3, the average range is 23 roughly and a half points. Okay. So at the beginning of the session, we can calculate what the potential range low would be based upon a measurement from the highest high the day before. And that's how we do it. The highest high less the average range on a cycle day 3 that's been observed over many, many cycles, can give us what the uh, potential range or average range measurement. And that was 27.67 quarter. 27.67 quarter. Yeah, you can see here. So you take the high 90.75 less 23, 27.67 quarter. So that was projected before the market ever reached there. So these are some of the ways that you can use the data in the spreadsheet to give us projections, not predictions, of where the lows or highs or ranges, range edges reside. All right. You take that figure, 67 quarter, right? That was near the cycle day 1 low at 66. All right. So now you're starting to form a zone. You're looking at profiles. Maybe you throw in some Murray math there. I know there's some Murray mathematicians in here. All right. Throw in, maybe there's a Murray level near that area. Again, you're building confluence, right? We all know how to do that. We've all been there. For those of you that don't, right? It's a learning process for you, right? You'll get up to speed with those type of things, but we're all looking for confluence zones from multiple sources. All right. Not everybody does a Murray. Not everybody does a Fibonacci. Not everybody does a 3-day cycle, right? But in the world, everybody's involved in doing that. So we're looking at where does everybody kind of come together? Where do all the roads lead to, right? Okay, all the roads lead to Shangri-La or something. Or is that the song? On the road to Shangri-La or whatever. So all the roads, crossroads lead to these confluent zones. That's where higher level confidence builds that there will be a reaction. All right. So it's not magic. All right. Yeah, we're on the road again. All right. It's not magic. It's just a matter of preparation. All right. And when we're well prepared and we have zones in mind, then when prices reach those zones, of course, that's when we're looking for trade opportunities, right? Those that don't know, i.e., the uninformed, as I refer to them as, right? You can call them retail, you can call them, margin Harry, whatever you want to call them, right? Those are the people that don't have a clue, and frankly, the market needs those type of people, right? Because if everybody had perfect knowledge and clues, the market would be kind of stagnant. But it's those that are in wrong positions, wrong-footed, and they do the wrong thing at the wrong time. That's what presents opportunities for those that are informed, okay, and prepared. All right. So again, it's all about preparation, guys, and that's what these tools are for. They're not magic. Again, it's not that I posted this after the fact because we wanted to pound our chest. More importantly, this was available before it happened. So, if you want that type of data in preparation, that's great. Again, this is just one source. This is the 3-day cycle that we follow. But I also use this personally with our method and so forth, along with, seeing what the Murray crowd is doing, seeing what the Elliott Wave crowd is doing, see what the volume profile crowd is doing, right? I want to know what they're doing. I want to know what they're looking at. And really, in your preparation going forward, today, tomorrow, a year, 2 years from now, and those that have been around for a number of years, we've had conversation here, kind of regress in my mind, of the days, right? Working back. Again, these are all the concepts that I learned back then working for the investment banks. Okay, and then we use them on a daily basis as market makers, right? Knowing where, and then working directly with the institutions, talking to them, seeing what they know, see what they're looking at. There's been a many of institutional trader, right, when I was a market maker that taught me quite a bit. All right. It Greeny, if you go onto the website, all right, if you go onto the website, where is it here? If you go onto the website, PolairsTradingGroup.com, all right, under the trading tab, okay, you'll see a 3-day cycle, okay, and then there, it is a subscription, by the way, to get the spreadsheet. It is a separate subscription, but you can read about the 3-day cycle. There's the image of the ebook, the electronic book, and there is a free document here. All right, if you want to click on that, and then there's a couple open workshop videos that we did for our group. All right, so take a look there. You can subscribe to the 3-day cycle subscription, but before you do, I would certainly recommend you guys, view the videos, download a copy of the free document. All right, have a little bit, background knowledge there, and if you want to subscribe to it to get it on your desktop, Rich, who provides it for us, no, it is a separate subscription, right? So the 3-day cycle, right, is a separate sub. Okay, and the reason for that is I have a partner, Rich Boisvit, who's in Europe. He actually produces the spreadsheet for us, all right, every day. Okay, so and it's actually his product. All right, so here's today's spreadsheet. All right, Friday, February 22nd. All right, so it's his spreadsheet, and he provides all this data for us. So it is a separate subscription. It's not expensive. It's $49.95 per month. Okay, so it's again, it's cost effective as far as we're concerned for what you get. All right, so that's how you look at that. So anyways, this is what we were looking at yesterday. Just get rid of this. Coming in, all right, so as you can see, yesterday's action here on the S&P, all right, came down, all right, off the high, and this was about the 67 quarters right about here. All right, this was the target area there, and of course we knew everybody knew where the 66s were, all right, from the other day's low. So, and then again, surprise, surprise, the market responds from that area, right? All right, it's not magic. All right, it's just a matter of understanding what the ranges are. Today might be a little bit tough. All right, having the market already rallied 75%. You can see here this level here. All right, 75% of the 10-day average to range. Right, is one of the calculations. So the value area here is roughly in that 75% range over the 5 days. So we have the low here at roughly 72s, rally up to the 85, 86s, 75% of the 10-day average to range. We're in the middle of yesterday's range, right in here. You can see the 3-day and the central pivot zones are all clustering around the 80s. I think it's going to be a tough opening. Somebody asked me about what I thought about the opening today. I think it's still going to be somewhat of a tough opening. All right, generally speaking, I think the market needs to, for the bullish case, the market needs to stay above the 86s, right, and then it can push higher. If it doesn't have that type of energy, all right, I think we can just kind of stay within the range here somewhere for today. Like I said, just my viewpoint at the moment, unless things change, I think it's going to be I think it's going to be a tougher opening, right, than we've had recently, until these parameters, are cleared. There's a lot of business that's taken place in here, you can see, right, just a tremendous amount of business. So this is somewhat of the magnet area, the gravitational pull, of where market may want to just kind of settle in and just continue to do some business there. All right. And that's how I'm viewing it at the moment. Right. It's still above the value area. Which value area? 5-day. Which value area? All right, now I'm looking at a 5-day here. We're right at the upper edge of that. All right. So, oh, yesterday's. Oh, yeah, we're up above yesterday's, sure. But again, yesterday's may not be as super important as the 5-day. All right. But again, it's all in context. All right. Uh, Bulls are stuck pre 86.85, right? Pre 86.85. Bears need, yeah, the Bears need 78 to try to change it. So yeah, again, Bulls are stuck at the highs, the Bears stuck at the lows. I think there's going to be a tug of war today until they work it out. 74 quarter down here. Okay. All right. So that's my assessment. I welcome everybody's viewpoints. All right. As always, again, that's what we like to do here. We like to share, viewpoints. Other people are looking at things perhaps I'm not looking at. Um, I'm not the be all end all. I'm just one of you guys, when it comes down to it, right? So anybody that can share insights, what they're looking at, I always welcome, commentaries, all right, for, levels and so forth, all right? Could be a scalp, more of a scalping type day, I just think the opening's going to be a little bit tougher today. I mean, we'll see if we can play it as best as we can. All right, on the opening here again, there's going to be somewhat of a gap on the NQ here. All right, so there is a little bit of a gap, but again, looking back at the NQ even, again, you're seeing a similar pattern, right, over there. So. Again, maybe just a bit of a challenge here today. Not every day is a great day on the on the opening range, by the way. All right. My preference are open gaps that are dislocated, right? Dislocated openings. That's my preference. But when we don't have much of a when I say dislocation, we could have a gap, but I mean if it's within the range, so we'll see. All right. My assessment is that it's a little bit more of a challenge than perhaps other times. All right. What else we have on tap today? Oh yeah, we got a lot of Fed speak today. Yeah. Yeah. A lot of Fed speak today. So, all right, guys. All right. I'll be back in just a couple minutes.